Good evening. Welcome to the ShadowTrader video weekly for Sunday, October 21st, 2007. I thought we'd start this week different with the overall volume matrix just so we can get a bird's eye view of the absolute rout that the markets took this week. The Dow didn't even have a single up day basically the entire week. The S&P only put in one up day. The NASDAQ, as we know, has been showing some relative strength, so it had a couple of up days. But the big news, of course, was Friday, October 19th, the 20th anniversary of the 87 crash, and on the same day we had kind of like a little mini crash of our own. Obviously this was not anywhere near the same amount of selling as we saw in 1987 because the markets were down on a percentage basis much bigger. The Dow was down 2.5%, as was the S&P and the NASDAQ. On Friday, you can see the numbers here, 367, 39, and 74. Overall volume was huge, but it was options expiry, but still it is enough to have two distribution days this week. As we know, distribution day is when we have markets going down, overall volume going up. Same thing here. We could give it like a small /D, right, just for the NASDAQ volume being up here. Dow was down 20 on Wednesday. Still the volume picked up a little bit. Thursday, nothing, and then Friday was the big, ugly one. All right, let's get into the charts. What I want to focus on mostly is the channels here that for the first time now in a while are starting to look like they're a little bit broken. On this S&P chart, if we look at some trend lines, I like to draw them here from the body. I've been saying if you draw here from the low, this was actually broken a long time ago, and that may have caused, you know, part of this move down. Now we're basically at this ascending trend line. It looks, this right here is going to be very key, I feel, because all we did right now is just pull back 38.2% from the high to the lows from the August 16th lows here. This is where we had the big sell-off where the S&P went all the way down to 1370, right? This is the Fed right here. This is that last Fed move 6 weeks ago, and then we got another Fed coming up Halloween. Notice that where we sold off to right here is 38.2. And now what I'm thinking is the next move is probably here to the 50, because I think that the rest of this little upswing from the Fed is not really going to support much of anything. So we probably have another move lower to about at least the 50% retracement at the 1477. And as you can see, there's a little bit of chop here that might hold things up. All right, let's take a look at the Dow. Again, ugly break of support. Completely lost the trend line here. How else can we draw it? Let's see. We could also go just like that, which would put us a little bit lower from this point. Obviously, as I was saying in the S&P, if this one was also snapped. So any way you draw it, it's a break. You don't really have a full-size uptrend on anymore. Now this one here is interesting. This is NASDAQ Composite, which has just been channeling higher and higher, and now it's finally starting to break down a little bit. But as you can see, because of its relative strength, we still have not lost the bottom of the channel. NDX as well. Just now started to break it for the first time. So you can see it's not an all-out, you know, crash scenario, I don't think, because you would have seen it even worse in these tech stocks. Some of these leaders are still holding up okay. And mind you, I'm not being bullish here at all. I'm just trying to paint it exactly as it is. Apple had a bearish day but didn't get too beat up. Google was majorly in the news on Friday because the earnings came out on Friday morning. The stock gapped up very strong, opening at 654.56. but ended up closing around 10 points lower than in 644, which is really not bad at all. Trend is completely still intact there. Bidu, another leader, still kind of looking okay, right? Dry ships, everybody talks about all the time, still has, I mean, you can kind of look at this both ways. Do they still have a ways to fall, or are they holding up intact? There's really no way of knowing that at this point. The bottom line is I think that after Friday's action, everybody's going to have to be a lot more selective in this market because it's very obvious it's not just going up every single day. All right, let's take a look at the core sector list, top 16 sectors that I watch every day one by one. And this will give us an even better idea as to what's going on in the market here at this juncture. The home builders, which when the chart was like this, I was saying was going to be an up. We managed to make this little swing here in Ryland. We were buyers here. And then we ended up getting stopped out, which is fine. And after that, it never materialized. So no harm, no foul, really. We did okay on this little run-up, which is really nothing. But I thought that the builders would have held up better and that this was going to be a change in trend, but obviously not. Builders are probably going to make another leg lower. They continue south. All right. Pharmaceuticals, which is drugs, which is generally defensive. This is finally cracking its uptrend here. Probably more weakness here. Do we go all the way down to what I call fill up the triangle? I don't know. I think that would be extreme, but again, note that that one has broken trend. Healthcare. Trend line broken. However, a pretty bullish chart. This probably has a lot of support in this area just below. Internet's still extremely bullish. There's still absolutely no loss of trend here. Baidu and Google, etc., have just been pushing this higher and higher. So even a fall here, I think a lot of people are still going to think may even be playable as a pullback. Keep that in mind. Biotechs have completely rolled over. They were showing a lot of relative strength, but now, as you can see, not so hot. Metals and mining still looks great. This is going to continue to be defensive, I think, as long as the GLD is strong. Transports rolling over. However, I would say nothing majorly bearish until maybe this swing pivot is broken and maybe this one, right? You're still pretty much intact there. The sector's just not really going anywhere. Utilities falling apart. Bam, but coming into a supporting area. Banking completely destroyed, as we know. That's daily. This is weekly. Another leg lower, I think, right? That's monthly. Look at the monthly in the banks. Could go to here, right? There's still room to the downside here. Retail, been destroyed for a while. That already lost trend a while ago, and when weak sectors get hit on a day like Friday, they just tend to sell off more. This is going to fill up the triangle for sure. Retail to 440. Insurance, broken. That's important because there's a lot of financials in this sector. Financials are a big part of the SPX. Over 20% of the S&P is in financial. Software still looks okay with a lot of the other NASDAQ sectors. Oils were the big story on Friday along with Google and some other things because not so much in the refiners, drillers, which is this one, XOI, but in this one, OSX just got hammered and just took back like all these days of gain. And this could easily move down to the next pivot, right? Probably has some support in this area. And last but not least, semiconductors, which are just destroyed. Although, as I've been saying in the broadcast, they're no longer really a leading factor in the NASDAQ. That leadership has been taken over more by internets as of now, and XBD, let me mention. Brokers, weak. I think they're going to go the same direction as the bank, and this could easily start to quote-unquote fill up the triangle. That pivot here is already broken, so that goes away, maybe even to here. All right, so bias is rolling over a little bit. Feels like we're getting weaker. Obviously, Friday was a major rout. The big question on everybody's lips right now is this going to continue? Are we going to get more? Impossible to say. All you can do is just go with the flow, realize where support and resistance is. As I was saying earlier, some of these stronger names I think are still going to catch a bid as long as the market doesn't completely have some sort of doomsday scenario. You can see that some of these leading stocks, Apple, etc., Baidu still holding up, dry ships, research in motion. You know, there's really nothing bearish about these NASDAQ tech leading stocks as of yet. A lot of the damage on Friday was in oils, financials, etc. And that's obviously the reason why the NDX is still looking, you know, just on the bottom of its channel, just barely, in the NASDAQ as well, because these indices don't have generally companies inside of them that are involved in the subprime mess, etc. There's no banks, there's no financials, etc., etc. So that may be someplace to be looking for bargains, quote unquote, although I hate to use that word, on any big pullbacks that may occur. All right, keep it safe, be careful out there. New stuff on ShadowTrader Pro is coming out soon. We're going to be sending out some free issues to everybody. We've tuned up that product a little bit. If you'd like some free samples to our newsletter, send an email to focusreport@shadowtrader.net. All right, on behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course, as always, all the good people in Chicago, Illinois, at Think or Swim, I wish you good trading and good night.